All right, what's up traders? What's up tycoons? Super excited for today's video. Just want to give you guys an update on TLT. So we will take a look at the daily chart and zoom out again on the weekly time frame, so you can get an idea of a little bit of the shorter term and longer term thesis with TLT. And of course, if you're going to be trading bonds or investing in bonds, treasury yields are going to be very important to you. So we're going to take a look at the TNX, which is your 10-year yield on the weekly time frame, also on a daily time frame here as well. So it'll be a good video. Be sure to smash the like button, subscribe to the channel. But I've also got lots of macro data that I want to go over with you guys. Some different things that we'll go, through in today's video. Some good stuff. This is a little preview here of, a few of the many different things that we'll be taking a look at. All right. I think it's some interesting data for you guys. I know a lot of the bonds people are a little bit more interested in the macro data, so I try to save it for the TLT videos. And again, that was just a quick preview of some of the things that we're going to go over. But as always, the content provided on this channel is for informational and educational purposes only, and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I started a completely free newsletter for you guys called Investment Intelligence, giving out free finance and trading content. And I also try to sprinkle in a free trade idea every single week in there for you. This is what the trade ideas will look like, right? We'll show you the chart, go over the patterns and all the different conditions, highlight all the conditions for you. So it is, so you know what it is that we're looking at, and break things down nice and clear for you. Now, it's all about quality over quantity when it comes to the newsletter. So you don't have to worry about me spamming your inbox every single day with, 5 to 10 different trade ideas, trying to brag about one that work. All right, and you can go review the website and take a look at some of the previous articles that have been published in the newsletter. And you can keep up with the newsletter via the website, or if it's something that you want directly to your inbox, you can sign up for that directly. And if you want access to all my different trade ideas, all my different analysis, custom scripts, indicators, valuable resources, such as being able to see gamma levels, dark pool levels, you guys can join the Investment Intelligence Discord. That's only $10 a month. This is a preview of some of the trade ideas, right? We're talking about iClean, going over the falling wedge and the cup and handle. This was a couple weeks ago, and you can see the option returns on that was very nice. Also, Intel, INTC was another one, just highlighting this key zone over here and how we bounced there 5 times previously in the past. And we came back to that zone, retested it again after a breakout, and Intel did very well also. And then, we highlighted the big block order that came in, basically about 1.5 million shares at $43 a share. And then we highlighted, where it was at. Intel was trading below $43. So seemed like a really good setup and opportunity. Those paid off pretty well. Now, let's start off here with some of the data. And we've seen a historic 19-week move, all right? But we've now got a weekly doji on the S&P 500. Now, these are indecision candlesticks, but oftentimes they can mark turning points, okay? Over here we had a doji candlestick, and then it marked a turning point, and we continued down lower. All right. So, we'll see if that's going to happen. It's not really the biggest bearish signal ever. All right. It is an indecision candlestick, so we could continue higher. But as we mentioned, oftentimes it can be a turning point. So we'll see how things develop over the next few weeks. The S&P 500 pretty much gone straight up almost for 19 weeks. Now, new highs have been faded into the market top in 2000. They are growing now. All right. So, just some more kind of breadth measurements. All right, if you take a look at the number of S&P 500 hitting new highs, okay, the percentage, this was 1997 to 2001, and this is 2020 to 2024. It's much different than the bubble of 2000. Okay, that's basically what this is explaining for you guys. So you're seeing, the net number of new highs was just continuing to go lower during that dot-com bubble era, and here we're actually seeing it continue to climb. Now, the S&P sectors are still circling between leading and weakening, but they are still somehow keeping safe and out of the lagging box. All right. And so you've got XLC, XLP, XLU, kind of turning up over here. And then you've got materials like XLB kind of going down. But they're still all in weakening and leading. Okay, so they're not really going over here into the lagging sector. So that is kind of a little bit of a positive for the market. The semiconductor index hasn't traded within 3% of its 50-day moving average since early November, right? It's got 80 consecutive days of closing at least 3% above its 50-day moving average. This past Friday, we saw Nvidia print a bearish engulfing candlestick. So, I mean, it's not a complete indicator that, hey, semiconductors and Nvidia are about to roll over, but I mean, it would make a little bit of sense if we were to see just at least a little bit of mean reversion, right? These things have gone pretty much parabolic. I highlighted that in a previous video, so I don't want to spend too much time on it. But this is the candlestick that we're talking about here on NVIDIA, okay? It's got an outside candlestick, right? And it is also a bearish engulfing candlestick. So, when you look at candlestick patterns, bearish engulfing typically, has oftentimes can mark the beginning of a pullback or a downtrend. So we'll see if that happens. All right. For now, every single dip has been being bought up by the bulls when it comes to semiconductors in the stock market overall. But there was a massive 10% intraday decline, okay? Because NVIDIA originally this past Friday was trading much higher, right? And we're right there around 1,000, and then we had a $250 billion decline in NVIDIA. Now, the reason that that's crazy is because the market cap for NVIDIA is so large. And normally, Apple, they used to say that, oh, well, one of the reasons that you don't see Apple just trading 5% a day or having these 5% swings intraday was because of how large the market cap was. But NVIDIA is still a very volatile stock, even with its large market cap. It's actually catching up to Apple in market cap and potentially going to overtake it. All right, a $250 billion decline is massive, right? And that's just tons of money flowing out of the market cap. And again, that's only from a 10% intraday, decline from the peak to trough. Now, when you look at retail investor sentiment, okay, the AAII bullish sentiment improved to the highest since December of 2020. Oftentimes, this can be looked at as a inverse indicator, okay? That's how some people tend to look at it. And so it's pretty bullish right now, right? It's bullish at levels that we haven't seen in a while. And so maybe that's a little bit of a contrarian indicator potentially here that, hey, maybe things are getting a little bit too frothy. Maybe everyone's a little bit too bullish and we could be due for a little bit of a pullback. Now, over here, we've got institutional investor risk appetite. The State Street Risk Appetite Index rebounded to 0.18 from negative 0.09, revealing an improvement in risk bias across the month of February. And, no surprise there that we saw the stock market making new all-time highs in February. You can see that this is actually starting to decline back down a little bit. So things got kind of frothy there and had a nice little uptrend. We saw the market to continue higher and it started to pull back a little bit. Now, when you look at mid versus large cap valuations, the multiple for the S&P 400, which is your mid caps relative to the S&P 500, is at its lowest level on record. All right. And so a lot of people you'll see on CNBC, a lot of the bears, okay, the people that have been the bears or the people that haven't owned any semiconductors or haven't been long a lot of tech, what they'll tell you is they're like, oh, well, we just can't justify buying these names. But what we do like is we like a lot of the mid caps. We like a lot of the small caps. And so if you're somewhere looking for valuations that aren't as stretched as some of these big cap tech stocks, okay, or even stocks like Abercrombie and Fitch that has outperformed NVIDIA, maybe you can look into some individual mid caps, right? Or individual small caps, or maybe you want to, dive into some of those mid cap ETFs or small cap ETFs to get a basket of them. Again, we're seeing it at its lowest level on record right now, which is, largely due to the performance of the S&P 500, not so much, that the S&P 400, that mid caps are like tanking in a bear market. It's just that the S&P 500, with NVIDIA holding as much weight as it does now, has really just been propelling the stock market higher. That stock is now the third largest cap, and you basically have the top three stocks in the S&P 500 contributing a massive amount to the performance of the S&P 500. Now, when you look at consumer debt service, U.S. households are now paying roughly as much interest on other kinds of debt, from credit cards to student loans, as they are on their mortgages. So, I mean, just think about that for a second. All right. Normally, your mortgage is going to be, your largest bill, right? And oftentimes the mortgage is bigger than, many of your other bills combined, but that's not what we're seeing now, right? They're pretty much the same. So, mortgage rates are also very high right now for people looking to, get into new houses due to how high the interest rates are. And that's really been propping the real estate market up, is because people don't want to sell their 3% or lower mortgage and get into a 7, 6, 8% mortgage, because then their mortgage payment would go up, very much, right? It would increase by a lot, and debt is just continuing to go higher, right? And especially when you take a look at the amount of interest that you're paying on it, on this debt, especially with, again, interest rates being so high, whether it's a car, whether it's credit cards, a lot of these interest rates are extremely high, and people are paying tons of money on interest. Now, the quits rate fell to the lowest level since August of 2020. This is the JOLTS report. So, that's kind of good for the Fed. We'll see. In my opinion, I really don't think that they're going to do many cuts at all this year. The stock market's just been too strong. And when you look at treasury yields, they just now started to roll over, but for a while there, they were continuing to go higher, right? And it was a little unclear, before the past week or two. It really looked like treasury yields in the bond market were telling you that, hey, we're going to, keep this higher for longer policy. We're not really going to see a dramatic, decrease in interest rates, or we're not going to see a large amount of Fed rate cuts. We've got FOMC coming soon. We've got CPI, PPI coming out very, very soon. So you're going to want to pay close attention to those and see how it impacts. Right now, the market's pretty much pricing in nothing for March. And then, we'll see whether or not the odds of a rate cut, increase or decrease in May, based on the coming inflation data. Now, investor sentiment, the latest data from Investors Intelligence shows the most optimism and the least pessimism since the summer of 2021. So again, things are very frothy right now. We're seeing the AAII bulls, very bullish, very frothy. We're seeing investor sentiment very optimistic. Again, oftentimes these can be contrarian indicators. They're not things to live or die by, but they are pretty interesting. And, so everyone's bulled up right now, and it's no surprise. I mean, we just made new all-time highs again on Friday before the stock market pulled back. So it makes sense. A lot of people are bullish, right? Now, the value discount. Okay, the value discount is approaching pandemic levels. Okay, and so basically what we're saying here is that value is extremely cheap, right? There's oftentimes people look at the stock market in two ways, right? They look at growth stocks, growth plays versus value plays and value stocks. And right now, growth and really semiconductors and tech have just been all the attention, right? And so a lot of the money is just not flowing into value. Okay. And it's, or maybe some money is even flowing out of value and into some of these, names, because oftentimes hedge funds, institutions, portfolio managers, if they're underperforming, some of the benchmarks, and if your benchmark is going to be the NASDAQ 100 and you have too much value, and you don't have enough tech exposure, and you have to catch up, right? I mean, you're going to have to answer to your clients, and they're going to say, hey, what are you doing, man? How come we don't have any AMD? How come we don't have any NVIDIA? You're over here buying consumer staples, you're buying consumer, utilities, and these things are just underperforming. And so, at the end of the day, you have to remember that, the market, investors do tend to chase, right? And they tend to chase in the direction where things are going, right? And so, when you see a lot of these plays rallying really, really hard, people are going to chase into that, right? And that's how some of these tops get formed. That's oftentimes how bubbles can get formed. I don't think we're at the top of a bubble right now. I've gone over in many videos all of the data that pretty much suggests we have anywhere from 80 to 100% odds of continuing the bull market this year and ending the end of the year, higher than where we're at right now, anywhere from 5% or higher than the current price in the market. But again, if you're someone who, is having a tough time justifying, getting into some of these names. There are good valuations out there, specifically in value, right? We talked about mid caps earlier. And when you look at some of these value plays, the value discount is much wider than normal. Okay, as we just went over here. Now let's get into TLT. Okay, so we won't spend too much time breaking down every little detail, all right? But there's always going to be a few signals that you guys can look for. Okay, now in the past, we highlighted the bullish divergence and the base building here. We had a very strong rally. And then we highlighted the potential top up here, right? And we said, hey, if we break this trend line, we get a bearish MACD crossover, and we break the initial bullish divergence trend line, well, that could start the beginning of a downtrend, and we had a target here of $93 for a gap fill, and you can see that we ended up hitting that. And over here, we actually formed some bullish divergence. Now, if you don't know what that term is, you're not too familiar with it, just take a look here, okay, in here. Clearly, we have a low and then a lower low, but on your RSI, we have a low, and then we actually have an equal low. So we have a slight bullish divergence here, all right? Same thing like over here where we had lower lows, but higher lows on the RSI. Remember, your RSI is your relative strength index. It's going to give you the relative strength of whatever it is that you're looking at. And so we're seeing that price is going lower, but relative strength is remaining the same here. Then we got a bullish crossover on the MACD right here. We had a very nice uptrend. And I mentioned, hey, above 93, I like TLT for some longs. It's had a really nice rally, went up to $96 here recently. And now the big question is, are we going to be able to break out from this downtrend, right? We've got a high here, we've got a lower high here, and another lower high here. Will we reject and continue heading back down lower towards that 93 area? Or can we potentially break out and head back up to that $100 area? I think those are going to be your key levels to pay attention to, over the coming weeks. Now, when you zoom out, okay, and we look at big picture of things, I do think TLT has the potential to head up to that $120 area. Market tends to move in 3-wave or 5-wave structures, and we completed a 5-wave structure to the downside. Okay. This was a very confusing time period for a lot of people in 2023. This sideways movement here, this chop here, and it shook me out a little bit in the beginning, a couple times, trading in this range until I was able to just zoom out again to the weekly time frame. When in doubt, zoom out. Right. And it really helps makes things clear. And we put in a nice triangle ABCDE pattern here for wave 4. And then we put in our wave 5 bottom here. And the 3-wave moves come in the form of an ABC, and oftentimes these are going to be corrective moves. Now, they can go anywhere from the 382 fib all the way up to the 618 fib. Those are typical areas where you will see, your ABC correction heading towards, okay? And so we've got a clear A wave, I think, in my opinion. We've started the B wave. Now, the question is whether or not this B wave is going to continue heading lower. If we break that 93 area, it can head lower. But ultimately, what we'll be looking for is a target of around 120, which the 38.2% retracement is going to be 119.69. So right around that 120 area. We've also got, old support, new resistance right in there, a key little zone. So ultimately, I think when the Fed does start to cut rates, that 120 is going to be an area where TLT can head towards. Now, the big thing you have to remember is, hey, if the Fed doesn't cut rates anytime soon, right? And, let's say maybe there's only even one rate cut in all of the year for 2024, and they don't really start cutting more rates until 2025. That's going to put a damper on TLT, and it's not going to be able to come up to that 120 level, as quick maybe as some of you would like. So just keep that in mind. Keep your time frame in mind. If you're targeting 120 call options that expire in 2 months, those are going to be extremely risky, right? But maybe if you're looking at just dollar cost averaging, or having some specific price points that you want to start legging into TLT on, or maybe you want to just wait for strength and look to see if we can break out past 100.62 and look to buy a breakout there, and then have that as a little bit of a stop loss. There's many different ways to go about it. Now, one thing that I'll be monitoring is if this can turn into a J hook pattern. Now, I've shown the J hook pattern a lot recently on some of my videos. It is one of my favorite chart patterns. It's got a high probability of success. It's a high probability of success chart pattern. And, we have the potential for a setup here right now. The J hook gets its name from the letter J, right? And so what you have is this, right? This is what you would tend to see the stock do and perform that J. So we have the move up here, and then this could be the potential for the J hook. So if we can break that yellow trend line from the daily chart that we were looking at and take out the highs at 100.62, then that's when we could potentially form that J there, okay? And so the confirmation of the pattern is the breakout above 100.62. On a weekly time frame chart that we're looking at, we would look for a weekly close above 100.62. And if we can get that, we can potentially form that J hook pattern. That'll be really interesting to see how that develops. Now, TNX, TNX, I think can head higher, but not this year, maybe not even next year, right? For now, I think we're going to be starting the correction. I mean, we've already started the correction here. It's just a matter of how low does it go. And so, on my macros kind of, time frame for TNX, we've got a 1, 2, 3 to the upside. All right. Wave 3 is always going to be your most impulsive. We've got 1, 2, 3, 4, 5 right here. All right. Completing wave 3 up at the 1.618 fib level right here, right around 5% on the 10-year yield. So a lot of that is tracking very nicely. And from here, you would look for an ABC correction. So very similar to how we're looking for that ABC correction in TLT. To the upside, we've got an A down here, B up. We rejected this key zone that you can see a little bit clearer on the daily time frame. And now we're looking for C wave to come down and target anywhere from 3.6 all the way down to 3.15. Now, we don't know exactly where it's going to go. These are just some targets to give us a little bit of a guideline. You can see that there is some old support here right around 3.25. That was old support here as well, and then a little bit of resistance over there. So that will be a key monitor area to monitor, basically 3.25. Now, when you zoom in on the daily time frame, there is a gap up here to fill right around 4.8, and there is a gap up here to fill right around 4.2. Okay, now we did call out the short-term top in TNX. All right, this looked like it was rolling over. Initially, we were looking for the move up into this zone, looking for an ABC structure up here. Your B wave is going to come in the form of an ABC structure, and we got that ABC up here. We targeted that key zone, rejected there, and put in a nice little rounded top. So that's going to wrap up the video essentially, guys. Thank you all for watching. Smash the like button, subscribe to the channel, right? Don't forget you can sign up to the Discord. Okay, that's where you get all the different analysis, all the different trade ideas, plays that I'm looking at, custom scripts, indicators, valuable resources. You can sign up for the newsletter, all right? That's completely free. So, two options there. And if you enjoyed the analysis in today's video, and you ever feel like you need that one-on-one touch, that one-on-one personal interaction, you guys can go to my Ko-Fi page. There's a link in the description for that. Click on the commissions tab, and in there you can book a 30-minute or you can book a 1-hour session. We can go over day trading dynamics, swing trading strategies. We can have a Q&A if you've got a bunch of questions that you feel like you need answered. Or maybe you've watched some videos on a few things but you still have questions. Feel free to hit me up. All right, they also have this little buy a coffee button, basically a way to leave a tip or donation for all the free valuable content I put out, such as the videos and the newsletter. And then if you ever want a video on a specific topic of your choice, right, and you have some requests that you would like me to cover in a video, you can also request that here on the Ko-Fi page. Click on the commissions tab, and there's a section for that as well. All right. I do these little coaching sessions all the time. Oftentimes people even hit me up for options and, different ways that they can use options to, leverage the shares that they own or hedge the shares that they own. There's many different ways to utilize options. So yeah, if you enjoyed today's video, I think you'll really enjoy this next one. So be sure to click on this video right up here.